Next up is Imperial. Remember, this group was founded by Bill Lynch, one of South Africa's also preeminent kind of corporate industrialists in the 90s and the Zips. Unfortunately, died early. He was replaced at the helm by Hubert Brody, who stayed and has since been replaced by Mark Lamberti. So that's the management succession that's come. Quite a similar business to Bidvest, but with more logistics and transport and vehicle distribution businesses in there. Vehicle distribution because they own the master license, so some big brands that have done well like Kia and Hyundai. They've got a bunch of other things. We'll pick it out as we go through the conversation, though. Also in Europe, market capitalization, 36.6 billion. So about a third of the size of Bidvest, but still a pretty substantial operator. Dividend yield 4.26%. Price to earnings ratio lower at 11.6. Rowan, do you think that's a reflection of the slight retraction of the motor vehicle business as a consequence of the rand having weakened and those competitive pressures?
Yes, yeah, so that distributor business is actually a large component, and they're much more traditional logistics business. And I think, again, they had a recent update as well in terms of trading conditions, and they were noting very subdued trading conditions in the sectors that they operate in, not only in the South African market, but in Germany, where they have large logistics operations as well. So that, I think, is weighing on the stock. They have clearly indicated that the distribution business, the car market's become very competitive. Buyers are price sensitive. They're in a weak position because of that depreciating rand, not much pricing power. And if you look at the volumes of those two brands, down significantly year to date. So that's weighing heavily on the share price.
Yeah, which is a bit sad, but you know, it would be lovely if everyone was buying cars and doing well, but it is a very big discretionary purchase for a lot of people. So if rates are high or if people are battling a bit, if the cars are too expensive, you're going to see that. But there are some great businesses in here. I mean, the European Hanif Reedery business, they've done like RTT, they got into the healthcare, they got into West Africa somewhat, so you got to like that. And I also like the fact that Mark Lamberti is pushing businesses like the Regent insurance business being sold to Hollard. That demonstrates a certain amount of capital discipline coming from the CEO's office.
Yeah, so I think he's focusing on allocation of capital, and really, if you look at the announcement, they're sort of focusing on their core competencies and their strengths. Regions become more diversified. It used to be coupled to the car dealership business, but less and less so. So they're saying, you know, it's not benefiting us strategically. Let's rather take that capital, allocate it. They've been growing very strongly in Africa. I think they have ambitions to continue that growth and reallocate the capital where they're growing strongly and they have a core competence.
Let's look at the share price and then let's call it hot or not. This one has drifted sideways at around 200 rands a share for about 3 years now. So is it ready for a breakout, or is it going to drift some more?
I think it's going to drift some more. I think the market's waiting for the results, and the issue is they've communicated that the full year results, 2015 results, are going to be down on the previous year. So I think the market's not going to get excited. Maybe the short term, if they get a good price for Regent, I think we could see a bit of short term strength, but it's sort of a wait and see at the moment.
So hot or not?
Hot, not.
Not hot. Not hot.
Not hot.
I'm going to go with hot. I've called these guys hot for a while, and I feel as though I've got to stick to that call and hold the line. I like the overall theme. Okay, good.